Hey there, it's Mike Langford. Welcome to the Advisor Financing Forum, a podcast presented by Skyview Partners. This week on the show, Aaron Hassler and I are joined by Roger Pine, CEO of Holistiplan, a company that makes providing tax planning for your clients easy and affordable. We invited Roger to come on the show as part of a series on improving the value of a financial advisory business post-acquisition. We spend a lot of time on this podcast talking about buying and selling RIA firms and solo advisory businesses, but one thing we wanted to dig into a bit more is what a buyer can do after the deal closes to maximize their ROI. I mean, you don't buy a business for what it is today or what it has been in the past. You buy a business for what it can be and the value that it can deliver in the future, right? In this series, we're going to help you discover new opportunities for increasing the return on your investment. And maybe if you're in the early stages of exploring the prospect of acquiring another business, this might help you see things through a new lens. Now, before we get started, as always, if you have questions about your specific M&A plans, please feel free to swing by skyview.com or call 866-567-6282, and the Skyview team will be happy to walk you through the options that are best for you and your business. Okay, let's get to a conversation with Roger Pine. Well, Roger Pine from Holistiplan, Aaron Hassler from Skyview Partners. It is so wonderful to have you both together on the Advisor Financing Forum podcast. Welcome to the show, gents.
Thank you. Good to be here.
Thanks, Mike. Appreciate it.
Well, I'm so thrilled to have Roger finally on the show because this is, a subject that I've wanted to cover a lot on the show. Is that how can we improve the value of an advisory business post-acquisition, right? And we're going to talk a lot about that today. And I think solutions like Holistiplan can play a very big role in that. And before we dive into it, I figured maybe it might be a smart idea, Roger, for you to give the audience a bit of a understanding of what is Holistiplan and how did the solution come to be and how can it help them in their business?
Sure. Okay. Well, my co-founder and we are both financial advisors. I was in the chair with clients for over 10 years. I'm also a self-taught software developer. And so toward the end of my time as a financial advisor, I and my partner, Kevin, we started really thinking about how do we make financial planning more scalable? There's a lot of great tools out there for making investment management very scalable. I mean, even the mutual fund, the ETF are scalable technology innovations, but then there's a lot of rebalancing software, great robo-advisor technology. But if you go back to financial planning, very intensive, labor intensive. You got to talk to the client and get to know them. You got to go back and run numbers and then type it up into a deliverable to explain what you came up with. And so that was really the challenge that we were working on. And so Holistiplan came out of that effort. And it's a year-round tax planning solution. And before people leave, when they hear tax planning, hopefully we'll get into why tax planning is interesting. I promise it is. But really the major kind of thing that kind of blows people away with the software is what we have an OCR, optical character recognition routine that will read in a PDF tax return. So you, the advisor, get a PDF tax return for your client, upload it into our system, and like literally within a minute, you've got a full multi-page deliverable with your branding on it to give to your client. A lot of great, rich information to talk about with the client. And then there are tools for throughout the year, kind of doing tax planning, taking that forward to actually act on some of the recommendations, observations that you come up with for clients. And so it's a year-round solution for that. And we've been at it for a little over 2 years now, and we have several thousand financial advisory firms using the product now.
That's really amazing. You and I have talked together on podcasts before, Roger, and one of the things that really stood out to me about how powerful the solution is, we don't think about tax planning as one of those things that is easy, and partially because there's just so many moving parts to it. But the OCR piece, or I guess it's not easy. It's simple, right? The concept of, hey, these are uniform forms, right? And
Yes.
while it would take like a human being a lot of time to go through all this type of stuff and then translate what you want out of it and bring it in, the computer, the OCR stuff is able to read it in. It knows where to look for every specific detail and bring it in and then repackage it in a way where it's useful and actionable. I thought it was so
Right. Yeah,
brilliant.
there's really two things in there. So there's just the efficiency. So it's true. I mean, I guess I should have said this. I need to get a better elevator pitch, but it's true. Like doing a real tax return review is like a 45-minute process because you're flipping through pages and you're going
Yeah.
back and let's calculate the thing. There's a lot of things that are not on a return. For example, your marginal tax rate is nowhere written on the return. So you would have to have a little spreadsheet on the side to calculate that. So that's one. That's just the efficiency piece, right? And so if we can cut 45 minutes down to 1 minute, multiplied out by our number of clients, that's a big deal. The other piece is consistency, right? So you can, if you have hundreds of clients, thousands of clients, how do you make sure that you're producing the same product for all of them? Again, on the investment side, it's a little easier. You have rebalancing tools and it's all numbers but when you start to get into financial planning, how do you know that your advisor in Omaha is seeing that if they were given the same tax return, they're giving the same recommendations, the same insights that someone in Miami would give? And so that's the other piece of it. A computer never gets tired, and a computer always will return the same information given the same set of original facts. And so those are the two pieces that I think really start to create a scalable financial planning capability enabled by software.
I love that you went down the road of making it scalable and consistent, and offer the opportunity to. And we're going to talk a lot more about this, about offering more value, because one of the primary reasons why an independent financial advisor or an RIA acquires another business, and that's the business that Skyview is in, right? It is providing the financing and the facilitating through investment banking, the acquisitions of businesses effectively. So if you're, one of the reasons why you do that is to create more value. If you're going to buy another business, right, is to create more value for the business. It's not just to get bigger, right? So if you think about acquiring $100 million AUM firm, if you're already at $100 million AUM, you should expect the firm to more than double in value. So I'm not just going to, I want some scalability, as you mentioned there. Opportunities for scale is one of the primary reasons why you buy another business. Aaron, how do you and the Skyview team consider post-acquisition value creation or growth, growth opportunities when you fund an M&A deal, right? You look at the deal, you're not just thinking about, hey, this is the way the business is today, right? And we're just going to staple them together, if you will. We're talking about creating more value for the future. How do you guys think about that?
That's a great question, and it's one of the questions we ask in that kind of underwriting phase for a prospective buyer client. But one, there's a couple of things. Even in just if you talk to a valuation expert, there is some economies of scale of adding another, say, 100 million, right? And so that business that's 100 million when you buy it is inevitably just worth more when you combine it into a firm that's double or triple its size, because you just have some efficiencies and economy of scale. But what Roger's describing in tax planning is something that I think a lot of firms don't do, and it's a super interesting value add. But we always look at what's the experience of a practice owner in terms of assessing the services that they currently have in that seller's firm. But it's kind of the stage we're in terms of the life cycle of these wealth management firms, and that the founding generation isn't as adept at technology. They aren't used to maybe some of the multitasking that younger professionals are today, and they don't offer the in-depth financial planning services or tax planning services, and or investment services in the way that a larger firm is. So you just inevitably have added services that we think enhance value. And so we always look at what does the buyer currently do that the seller does not, and will they be replicating those activities? But do these economies of scale allow them to add in different solutions. And I'll be interested to hear more as Roger kind of describes his business, but I feel like that's where we've gotten to in today's world, is that there have been some fintech solutions over the last 5 years that have really made wealth management practices a lot more efficient. And so we are seeing that people are retaining their pricing and offering more services. And, from a financing perspective, that's music to our ears. You're retaining revenue and you're enhancing the value to the customer. And that's a win-win in our book. And it sees big dividends for valuations in the future.
While Aaron was talking, I thought of something, which is also there's the issue of when there's a succession story. This is someone who's got a relationship with these clients. It goes back 30 years. And then let's say they're selling the business to an acquirer and they're saying, hey, don't worry, this new young Turk is going to take over everything and they're going to be great. Well, the reality is that person needs to prove themselves, right? This happens even within firms when you're moving advisors from one person to another. And so a lot of times, like, it's really great to have something which is, you work with Bob for 30 years, but let me show you this new thing that I'm able to offer you, a quick win that allows me, because I can't build a 30-year relationship quickly, but if I can earn trust within a couple months by really wowing you with these new services, that cements that relationship and then gives credibility to the whole transfer of ownership, the transfer of the relationship. It's true within an existing firm, but it's especially true, I think, when you're transferring branding and moving relationships that have gone on for a long time.
Yeah, especially if you're moving from that senior-aged professional to a younger professional, right?
Right. Like, where's all this guy's gray hairs? Like, I don't know if I can, right.
Right.
Yeah, and that's a really important point. I didn't really think about it that way. That every time you change relationships, even if there's been a little bit of warming it up, like, hey, this is my successor, you can trust him or her to do right by you. There is a little skepticism or resetting of the comfort zone, right? Of like, are you really going to be my person? And it's logical to say, hey, if I'm changing advisors anyways, why don't I now look at other advisors that are available, right? So, this is a good time to make an evaluation, and you better be there to make sure you retain that business. It's funny, but we were in prep for this pod. One of the things I brought up as I think about this improving the value of the business that is being acquired is I liken it to the real estate business, the rental real estate. If you're going to buy rental property, that, if you're going to suddenly have a new landlord, and if I was buying that property, I don't want to just keep the current rents, but also if I'm the tenant, I'm like, hey, what are you going to do for me? And are you just a new owner? And so what usually happens? New ownership, paints, adds new carpeting, adds new services or whatever, makes the building more energy efficient, a whole bunch of new things to improve the quality of the property, to be able to increase rents a little bit, and hopefully keep their tenants. And I think the same thing is at play here for an advisory business, right? That how do we keep everybody happy, as you just described, Roger, but how do we also find more value in the business? One of the things you said that was really interesting in that prep call, Roger, was that the biggest challenging facing the industry is how to make financial planning process more scalable. And you hinted at that when you talked about you were describing your elevator pitch there for Holistiplan. Let's elaborate a little bit more on the financial planning process and why has it been challenging to date to scale it?
Well, it's because to do it well, because everyone's different, right? I mean, human beings are different and their circumstances are different and their jobs are different and where they live is different. And whereas we've spent many years building the technology and the infrastructure to make portfolios look very similar, and even when they are different, to be able to kind of abstract that back to rebalancing equations and things like that. Whereas financial planning, there's these three elements. There's the gathering of data, which is very labor intensive. I got to sit down and talk to you. There is some, I think, good work happening now around allowing clients to provide information on their own time. We don't always have to bring them in for a meeting to, maybe we can just upload a document to start that conversation, right? things like that. The Amazon experience where at 3 a.m. you can engage with your advisor on your own time. So that's the data gathering piece, which is probably the least scalable of all, because that's the getting to know the client piece. And that's not bad, actually, because that's how relationships are built, right? That face time is valuable. So if anything, that's the last thing we want to commoditize. There's the analysis piece next, right? And that is, taking all this data and taking it down to creating observations, creating recommendations, giving a client a plan for dealing with that. There is quite a bit of software around. I mean, there's financial planning software, obviously. A lot of it is tailored toward what we in our company call strategic financial planning, the 30-year horizon type decision making. Like, hey, yeah, if I save this amount and make this amount and spend this amount, by the time I'm 85, I'm going to be broke or not, that sort of stuff. But the reality is, when you're a financial advisor, a lot of your time is spent on what we call tactical planning. It is an internal term, but tactical planning being, this thing happened to me this week. I have to make this decision about how much to put into my 401k this week, or my employer has added a new set of benefits. Should I look at them? What should I change? It's open enrollment season. All these sorts of things that some of them happen every year. Some of them happen at very specific times of someone's life. That is very labor intensive stuff that advisor just needs to do. That's the firefighting. Again, very heavy relationship building stuff, because if you can prove that you have credibility in those areas, it's very valuable. But again, not scalable unless you have a ton of great checklists and models and stuff like that. And then there's the communication piece. It's coming back to the client and saying, okay, I have distilled all this information you've given me down into this set of recommendations. And now I'm going to explain to you, first of all, what we're talking about, because this may not be a subject the client knows a lot about. And then I'm going to give you an action plan and help you through the process of doing it. All three of those stages are by their very nature not terribly scalable. And also remember, I consider scalability to be not just efficiency in terms of time, but also the consistency in terms of the deliverable. How do you, as a larger organization, if you're a firm, again, if our audience here is people who are building firms potentially through acquisition, how do you make sure those two firms that you've merged together have consistency across the deliverables they're giving to clients? And the actual answers they're giving clients, given the same fact pattern. And so I think that those are the areas where those analysis and communication sides, there's a wealth of opportunity for advisors who are building infrastructure, who are using technology solutions to really, really hone their capabilities there. Because that's where a lot of firms, because it's hard, they don't do it. Or they'll do it for only their top 10% of clients. You know what I mean? And this is an opportunity for us to give, I think, valuable planning to all our clients and deliver on the promise that we made to them when they hired us. And then we can talk about this later, but I think there's a massive prospecting opportunity there as well, to show that you can do these things when the guy down the road doesn't do them, or your existing advisor doesn't do those things.
Well, and from a valuation standpoint, Roger, I think that consistency of output is probably one of the harder things to achieve, right? When you're talking that firm with multiple advisors, especially as you're bringing in junior advisors and or adding people into that team, that consistency of output certainly makes a tremendous difference, I think, in terms of how these firms grow organically. And that's where we see firms that are really valuable. It's one thing to go out and acquire, because I think it's fantastic, and you really, when you impact 100 million into your firm, it's an incredible growth. But if you can then turn that around into 20% organic growth from that 100 million, now you really have an exponential growth factor that's hard to replicate, right, from just another acquisition. And obviously it makes that acquisition, I think, that much more efficient, that much cheaper. So I love the idea of that technology efficiency of, client uploads one document, and then you can create that consistent output and that consistent result every time, and have something to revisit on an annual basis.
Totally.
Right.
Yeah. We didn't get into that, but taxes happen every year, unlike some other planning things.
Yeah. Let's dive into that now. I had something else that's popping in my mind. I'll have to remember to it. Roger, I want to follow up on, because you and I had a conversation prior to me introducing you here to the team at Skyview, we had a conversation about how valuable tax planning can be for folks who have a lot of money, or for folks who don't yet have a lot of money, right? The impact on tax savings and tax planning can be great. So I want to talk about that. But let's dive into the whole recurring nature of taxes, not only as a thing that we all have to deal with, but as a revenue stream, right? So advisors are, or at least they should be, always on the hunt for new recurring revenue streams, right? If you are a business owner, you should be looking for ways to, with the same customer base you have, can I add a new revenue stream? Can I serve these people better? And honestly, one of the greatest things about our industry, which I think makes it so attractive, is the recurring nature of the revenue stream, right? It's remarkably stable, as the Skyview team will tell you. That's one of the reasons why their lending partners are so excited about this, is like, it's stable. These businesses don't go out of business. They don't declare bankruptcy for the most part. You don't see them suddenly have a revenue dip of 50% in 1 year. It's very consistent. Yet, more RIAs and independent financial advisors rely almost exclusively on AUM fees, right, for their business. Yet tax planning and strategy offers another opportunity for recurring revenue. So would you mind kind of explaining why taxes are such an attractive recurring revenue stream for advisors? Yeah.
We're making the case for taxes. I'm hoping that people didn't leave the podcast already when I said earlier that we're a tax planning solution.
Well, they're all hopped up on Red Bull and caffeine. They're excited here. Plus, look, who doesn't want to just hang out with these guys?
If people have made it this far, I will, yes, try to make the case for tax planning. I think you said a few things there that are totally on the money. First of all, taxes are everybody, right? I mean, like, it's not just millionaires. I mean, some advisors, there's certain services that only make sense for multi-millionaires. Like, I'll look at estate planning, for example. Everyone needs it, but a lot of the really hardcore estate planning things start to come up when you talk about the difficulty of multi-generational wealth, et cetera. So, but taxes, all of us have to do it. And like you said, all of us have to do it every single year. And there are a lot of topics that, as a financial planner, you would like your clients to deal with, and estate is one of them. Like, please get those powers of attorney built. And then it's like, yeah, I'll do it next year. Well, guess what? You, the advisor, do not have to beg your client to file a tax return every year, because they are required by law to do it.
Yeah.
And so you get to reap the rewards of someone else's hard work to require your clients to file a tax return. And so, yeah, that offers an opportunity every single year for engagement multiple times through the year. And you mentioned, extra revenue or not. It kind of depends on the business model, right? I mean, if you're a retainer based, and in any case, no matter what your revenue model is, it's more touch points, which is always what drives client relationships, always drives retention, always drives growth. Like, what is it? I need a good, valuable reason to be talking to this client. And tax gives us multiple opportunities to do that. So the first one, we'll start with, it's April or it's May, and your client just filed their tax return, and it was kind of a painful process, but they're glad it's done. And they get this document, which is hard to understand, right? I mean, it is an ugly, poorly designed document with nowhere on it does it even say what your marginal bracket is, which blows my mind. But that's that thing that people want to know. What percent did I pay? Not on the document. So you, the advisor, level one of value is just saying, hey, I looked at your tax return. Thanks for uploading it, giving it to me. And here's some observations I have about it. You were in this bracket. You pay this in capital gains. Your income is within levels that make you eligible for these things, but not these things. That's level one. Level two is then, well, maybe level 0. Let's just say sometimes CPAs make mistakes on returns, and you, the advisor, sometimes they're making mistakes on something that you advise the client to do. And I've had this situation where that causes stress for the client, right? Having a mistake on the tax return is not anybody wants. And if it's something on a strategy that the advisor recommended, that Roth conversion last year, that can be a problem. So you got to check for that. And by the way, if it's not captured right on the tax return, it didn't happen. So the best laid plan that's going to save your client all this money, if it didn't get reflected on the return, it didn't happen. So that's level 0. So then level 1 is then, here's what happened. Level 2 then is, okay, I looked at this. I noticed some things that we could probably try to change for next year to actually save you money on taxes. Now that's a conversation every client wants to hear, right? And I guarantee in that conversation, they're not asking, okay, let's go back to talk about my investment portfolio. They are locked in on that tax return conversation. So now we have a new line of communication we've opened with a client about another subject. Now we kind of move into the end of the year. Now there's certain things that have to happen by December 31st. If you're going to do that Roth conversion, if you're going to do that qualified charitable distribution, you got to do it by December 31st. It has to happen. So there's another great touch point with the client. It's October, November. A lot of advisors are already doing some work with capital gains around that time, right? Capital gain harvesting, loss harvesting. But there's a whole other set of stuff we can be doing then to engage the client. Look at these numbers I ran. Let's talk through these. That's a really, really useful another touch point. Now we get into the first quarter. We did all this amazing stuff last year. Let's remind the client about it. And also let's help them prepare all this information for their CPA. Yeah, I mean, I hate to admit it, but we advisors complicate tax situations for our clients. By doing all this cool stuff, we make their tax preparation a little more complicated. And so they need to make sure they are communicated effectively to their CPA or to TurboTax if they still do returns on their own. So now we've already reached 3 major touch points throughout the year, and then now we're back in May the next year. They just filed the return. We're able to check if all that cool stuff we did last year landed, and we can repeat the process again. So just taxes, it happens every year, it's evergreen, and we have all these amazing touch points that are really rich. I mean, taxes touch every single part of your finances, and it's emotionally loaded for people too. Like taxes is not something that people just like, oh yeah, I did my taxes. I didn't even really look at it that much, what I paid. You look at it. You may not understand it, but you look at that number. And deep down you wonder, like, did I do it right? Like, could I have saved anything? And if you can assure the client, yes, you did everything you could, or next year we can try to do this and save some more, that's an enormous, emotionally rich conversation, not just technically rich, I think.
Yeah.
So I don't know. Did we make the case for taxes? Are we pumped about taxes? I don't know.
You did. We're on board. Mike and I are on board.
We'll have to see.
Well, no, I think it is interesting, Roger, though, because I use the personal experience. My wife and I were meeting with our financial advisor, and he goes in and one of the things we like about him is that he's got a good tax knowledge. But he helped us decide, do we do the standard health insurance plan, or do we do that high deductible tax plan? And he's able to, or high deductible savings plan. And he was able to assess for us, hey, if you did this HSA account and your high deductible plan, you're going to save, I don't know what the number was, X thousand dollars on your taxes, and it ends up being cheaper than you in the long run. And that's a super simple conversation. It probably took 30 minutes to resolve for us. It was running through that calculation, helping us decide which plan. We walked out of the meeting, signed up with that plan, and go. But that's that little, it's a big answer that allows us to then say, gosh, this was impactful for our lives. And it made us want to refer that advisor, more times than not. It came up, hey, I got this resolved, and this was a big weight off of my shoulders. And that's something that's easy to talk about when you're, walking around the block or talking at kids' sports games. It's those kind of little examples that build up referrals, in my opinion.
And again, that's a great example of what, remember I was saying earlier, that's a tactical planning service, right? I would imagine that you're much more likely to talk about that at your kid's Little League game than, hey, I had a great conversation with my advisor, and he said that when I turn 85, my portfolio is going to be $2.5 million with a 75% probability rate. Like that's not as impactful in our day-to-day as these tactical, ongoing engagements we have with clients. So yeah, it's a great example. It's not huge. It's not a really overly, we're not talking about an offshore Cayman Island tax shelter thing. It's an HSA. But it's a thing that would probably slip through the cracks for someone who didn't have a financial advisor, So it's a great example.
Well,
It's interesting, financial advisors by the nature of finance spend most of your time thinking about the future. That's, kind of, when you remember back from college, you were learning the difference between accounting and finances. Accounting is now and in the past, and finance is thinking about the future. So advisors by their nature are thinking about, how do I grow this portfolio? And by the way, that's their business model, right? I grow AUM, I can make more money. And one of the things you said to me the first time we met, Roger, was, look, we spend a lot of time talking to clients about how we can help them make more money and grow their portfolio. And, once the general gist is set, there's only marginal increase, the difference between you earning 10% in a year versus you making 9%. If you have a $1 million portfolio, it's $10,000, right? It's a $10,000 delta. However, with proper tax planning, we may be able to discover much bigger opportunities there. In any given year, we might save you $50,000, and that works at that very, very big high level, and it works at the lower level. If you've got a young client who maybe has $100,000 to invest, and maybe as a couple they're making $150,000, you might be able to have a much bigger impact on their finances with tax planning, right?
Yep. Actually, that gets back to really at the core of why I left my job as a financial advisor to start this company, which is I saw people who were friends, people who might have life savings of $25,000 or something like that, who could not afford to work with me as a financial advisor working on AUM. And their question they would always ask me is like, I've got $25,000 saved. How should I invest that? And the reality is 1 or 2% alpha on the return on a $25,000 portfolio doesn't really move the needle that much. Still make good decisions because of course it compounds. I understand that. But that same person, that HSA conversation, if that person had that HSA conversation with me, a multi-$1,000 savings on a tax return is much more impactful to them. They're talking, it's way more impact for them. But that's the sad part, is like the only people in our society, in our country, who can really afford that deep, rich financial planning are the people who are paying that retainer because they have $1 million in the bank, right? And so that was the disconnect that really bothered me. Like, I want to reach a point where financial planning is something that everybody can get access to, because the reality is the people who need it the most are the ones who probably aren't getting it as much. Because once you got 10 million in the bank, the reality is those returns start to make a big difference. That 1 or 2% alpha makes a big difference. Saving $2,000 on an HSA is actually kind of budget dust for them, honestly.
Budget dust. I'm going to use that from now on. Budget dust is a new term in my vocabulary. I love it. That's fantastic.
But that is the future of our industry, right, Roger? The idea that at the end of the day, if we can continue to have more people using financial planning advice, it's just going to further this industry. And so I love it. I love that idea that you're getting people to engage at a number of different levels.
Yeah, and I tell you what, I hope that we as an industry build it before Amazon builds it, because I wouldn't put it past them to be working on this stuff. And I would much rather this sort of information, these sorts of services come from advisors, the people listening to this podcast, the people who value those relationships, rather than something that's much more transactional, someone coming at it from a pure, technology only perspective. We want to use technology to enable humans to do a better job, because I think that's going to give people the best outcomes. I truly believe that.
Totally agree. One of the things I think it's really important to think about if you're an advisor, and maybe this internally, but you don't think about it openly that much, is that, look, you're probably the most trusted person in your clients' lives when it comes to financial questions, right? If they have a question, they're thinking you're going to know the answer to it, or know how to find the answer to this question. And that may even include, tax planning and other financial planning stuff. But as you mentioned, Aaron, when we were prepping for this pod, is that you and the Skyview team have discovered that many RIAs and advisors are coming up short when it comes to delivering comprehensive financial planning. why do you guys consider this a shortcoming? I mean, you're on you guys have investment banking and you provide financing for M&A deals. Why is this something that you are thinking a lot about when it comes to the advisory business? Why is this a shortcoming in your mind?
Well, it's a good question. I think as I talked about a little bit, I think some of it is just an opportunity within the age. If you're doing M&A, you've got an older advisor, typically in their 60s, maybe even 70s, or as we're seeing now, a lot in their mid to upper 50s. And they've all, practiced this profession for 20 or 30 years. And I think some of the best advisors are, replicators, meaning that they can have a consistency to their process and they know what they do. Well, then you're trained to just go get more clients and build more revenue. You weren't necessarily trained to add more services. I mean, sometimes that might be a byproduct of your growth is to add more services. But when we're seeing it from a succession planning standpoint, I typically feel it's as we kind of touched on earlier, it's how do I, as that buyer, that slightly younger, maybe age advisor, or that newer relationship, come in with a trusted voice. And one of the ways to do that is going through a full financial plan. And some of it is you just simply learn more about the client, right? You're getting better in-depth engagement with the client. You're learning more about that client, learning how to service them better. And we see it even on when we're working with clients to sell their business. The intake process is incredible. I mean, just getting the document uploads to get the data on their practice takes us weeks, right? And so that's why I love the OCR you were talking about and being able to scan this data in, because we have interns that are literally, looking at, pieces of spreadsheets and or piecing together, all of our client documentation. Because there's just, let's face it, there is always a limitation. I think the older you get, the harder it is to adapt to some of these technological differences and changes. And so I think financial planning is just one of those things that it's really digging in under the hood. It's providing that deliverable, but it just creates that deeper client engagement and builds that relational trust. Makes such a difference.
Totally. Yeah. I mean, I don't know if, I hear over and over again that investment advice is becoming commoditized. I hear that. I've heard that in conferences for like 10 years. And I think there's elements of that are true, but I think also there's still need for someone. Hand holding is a human thing. But if you buy into the idea that investment advice, pure investment advice, is becoming a commodity service, it's just, this is the way the industry is moving. And so if you built your practice based on running investments for people and putting them in those index mutual funds, that may not last as a differentiator. So I don't want to be a Chicken Little saying, your business model is broken. I think people can still do a great job just running investments. But certainly what I hear and what I've seen is there are people entering financial planning because they see the writing on the wall for that pure play investment service. And by the way, that's borne out in the people signing up for our product. I would say a good 50% of the firms who sign up for Holistiplan are firms who have never done tax planning before. And now out of the box, they have that capability, this year-round capability that took other firms many years to build up. I mean, the other half are people who've done it and they're looking for the efficiency gains. But I'm talking like 50%. So that's thousands of firms who are using our product who came on with very little access or very little infrastructure built on tax planning before. So I think that's very telling that the industry is moving that way. And we've talked about good business reasons why, moving the relationship from one to the other, but I think this is just the way the winds are blowing. And I think it's a good thing because your finances are not your finances are not just your investments. All these things talk to each other and feed into each other.
When I was thinking about both of you guys just said some great stuff. The common theme that I heard there was opportunity discovery, right? So opportunity discovery for the client, right? Helping your clients better, like discovering savings opportunities, discovering opportunities to better invest their money from a taxing perspective or from a financial planning perspective, like seeing things for them. But it's also opportunity discovery for your business, right? As you mentioned, Roger, 50% of the companies and individual advisors that are signing up for Holistiplan are doing this for the first time. So they're basically adding this new service to their business because they've discovered this is an opportunity, or they're discovering there might be some risk in their existing business model and they need to mitigate that risk by adding another revenue stream. One of the things that I imagine, however, is there might be a bit of apprehension from some of the audience members, right? They're watching or listening to this and they're like, hey man, I've been in this business for 20 years. I came in as basically a stockbroker and grew my business. It's relationship based now. I call myself a financial advisor, but I don't know taxes. I'm a little uncomfortable here. How do you go about breaking things down so it feels simple and comfortable for the advisor who's currently not offering tax planning services, but they get it. They're like, oh, that does sound awesome. I got to tell you, I'm a little nervous here.
Yeah, well, I mean, I will say sometimes a barrier that has to be overcome is just a compliance barrier, right? Within a certain firms, they just say, look, we do not do tax planning. And so there's a whole other business case that has to be made for why it should be done. But assuming that that's not there, the question is, it sounds like, how do I start doing something I never did before that's really hard, and not just really hard, but has enormous impact. If you get it, if you make a tax recommendation that's wrong, that's very impactful in a very bad way, in a very bad way. And even the word recommendation, of course, there's regulatory things around what constitutes tax advice, and I'm not going to get into that because I'm not a lawyer and that's not my area. But I think it's like anything else, whereas you have to start. I mean, like you have to start somewhere. And every firm that's been doing tax planning for many, many years started with someone looking at a tax return. And then what happened next was they looked at enough tax returns that they're like, you know what, I'm going to make a little spreadsheet to help me do this analysis because I've done it 3 times now. And then they're like, I want my paraplanner to do this instead of me because I'll make a checklist for them. And then, all these this is how infrastructure gets built over many years. So these firms this 50% of firms who are already doing tax planning who bought our software, they already have a lot of infrastructure, and we're helping them do it faster or more efficiently or whatever. But everyone else, I mean, you have a choice. You can build it from scratch, or there might be tools like ours, or there might be services. There are services like FP Pathfinder. It's a firm that sells on subscription like checklists for out of the box. Do you want to start doing tax return reviews? Here's a checklist. And so there are ways to do that. There are ways to not have to build it all yourself and do the research and dig into stuff. You still got to understand it. You still got to invest in your own knowledge, but your clients are expecting you to do that anyway, I would hope. And so, yeah, but it's a choice. If you make the business case for, I think tax planning is worth doing, then yeah, there's infrastructure to build. You can buy some of it off the shelf like we provide, or you can build it yourself like people had to do for the last X number of years before we existed, right?
Roger, are you able to share like average size, do you think, of a subscriber for your software in terms of AUM, or do you see like more of your 90% of your clients are multi-advisor shops? I mean, do you guys have any kind of trends that stick out among your client base?
Well, I mean, given that my motivation for starting the company was let's provide richer financial planning to more clients. It's been important to us from day one that a solo can use our product and a multi-state, multi-thousand advisor firm can use our product. So it runs the full spectrum. I would say, and I don't know the exact breakout, but there are a good number who are solo practitioners. And our industry is still a lot of solo to small ensemble firms. And I would say that's going to be 80% of the people we work with. But we do work with, your broker-dealer names that I probably shouldn't all name because I don't know all the rules we have about naming them. And we have some huge RIAs who are enterprise users on the software. And the business cases for each are different, right? I mean, like if you're a big enterprise, we talked about ad nauseum, like why an enterprise customer might want to use the product. Efficiency gains, consistency across all their offices. A solo provider where everything's on fire and they're just trying to get clients in the door and prospect and all that stuff, they're looking for maybe that more out-of-the-box planning capability that maybe they didn't have time to build yet because they're new or for whatever reason. And so the business cases people have for buying the product are different based on who they are.
It's really interesting. Well, I think we've reached the end of our time here, but one of the things that I imagine we're going to get is how do I get started with this, or how do I try out Holistiplan? Like what's the process for getting this ball rolling? Because I would imagine, as you mentioned a couple of times, maybe some people are like that, tax planning, I'm out, and they pulled the plug on this. But I doubt it. I think most people have made it to the end with us here, and they're like, okay, you guys sold me. Let's go. I want to get. Let me get this in my
tax
business.
stuff. Yes,
Exactly.
Yeah, they're believers by now. Yeah.
So what's the process for whether it's a solo advisor or a firm, as you mentioned, a larger firm, getting started with Holistiplan?
Well, we have a free trial, so you can get in there and upload your own tax return, right? Just get in there and, if you're an advisor, upload your return, or, there's certain political candidates who put their tax returns out there publicly. So it was every once in a while we see these same names of senators and stuff come through. So if you're worried about putting client stuff up there on a trial, that's cool. So yeah, just give it a try. Our trial is 7 days, and it's you can upload up to 3 returns and just give it a shot. And I will say, like, you mentioned, Aaron, earlier, the 529 example. The very first return that was ever uploaded to our system was an advisor who uploaded his own return. And our system saw that there was no 529 deduction on the return. And so one of the things we pop up in this report is you might consider contributing to a 529 because it's an above-the-line deduction, and this is your bracket, this is what you would save. And he had actually contributed to a 529, but his CPA missed it. So right off the bat, the very first return that ever got uploaded, he was like, yeah, I just refiled my return. I saved another $4,000, or I can't remember what it was. But that was a huge win. And so, yeah, I don't know.
That's awesome.
Upload your own return and see if you find something in there. I don't know.
Success on the first try. Awesome.
It was great.
Fantastic.
It was great. It was all downhill from there, but that first one was amazing. It was great.
Oh, that's amazing. So holistiplan.com, and we'll make sure we have the links to that on the show notes. Any other way, if somebody wants to connect with you individually, you're active on LinkedIn and other places, I assume?
I'm not terribly active. We do have a Twitter handle for the company, and I am on Twitter. Don't touch it much. You'll actually see me the most. We have a YouTube channel.
Okay.
And so like when we do a lot of feature updates and things like that, that's where we show pictures of it. So if you kind of just want to spend some time looking at what this product does and how it's evolved over time, there's actually a video I did in there, a feature release video where I was running across the Grand Canyon and back. Okay. And so during that, I actually did feature updates from like the bottom of the Grand Canyon, from the North Rim. That was a popular kind of out there video that people seem to like. So find that one really out there on our YouTube channel.
Love it.
I'll tell my kids. I know they spend most of their time on YouTube watching some of your old videos. But
talk about tax planning. Yes.
There you go. That's awesome. That's awesome. Well, Roger Pine from Holistiplan and Aaron Hassler, of course, of Skyview Partners. Wonderful having you both on the show. Thank you very much, gents.
Thanks. It was a lot of fun.
Thanks, Mike. Appreciate it.
Thank you very much for listening to and or watching this episode of the Advisor Financing Forum podcast. It's fantastic having you with us as always. So what do you think? Tax planning. Am I right? Seriously though, if you've reached this part of the podcast, or as we call it in the biz, the end, you get it. Adding tax planning to the services offered by your RIA or independent financial advisory practice can dramatically increase the value of your business. And if you're already offering tax planning to your clients, leveraging a technology solution like Holistiplan can add efficiency and scale to your efforts. To that end, huge thanks to Roger Pine for joining Aaron and me today. I love chatting with Roger. He's got such a calm demeanor. You feel like you can conquer the world after you spend a few minutes with him. So awesome having you on the show, Roger. Thanks again. Okay, before I let you go, if you have a moment, make sure you subscribe to the Advisor Financing Forum podcast on your favorite podcast platform or YouTube if you haven't done so already. We are working on a lot of great content, and we've got some big announcements coming from Skyview, so you're not going to want to miss any of that stuff, okay? Lastly, make sure you swing by skyview.com to learn more about your options for financing to facilitate your plans to buy or sell an RIA or independent advisory firm. The Skyview team is here to help. Okay, that's it for today. We will see you next time on the Advisor Financing Forum podcast. See ya. Bye.